Hello guys, welcome to a Trading Parrot. Bitcoin has been holding 70k, 69k to be more precise, and our support at RSI 35. But there are some signs that potentially could indicate that this move in here is just the beginning of an ABC pattern, a bearish one, continuation to the downside. We need to assess that, and we are going to do it together. We're going to look at the liquidity, the pools, the fair value gaps below us. And as usual, we never marry any hypothesis. So we are going to look also into this trend line, and we're going to explain what needs to happen for the ABC hypothesis to get discarded so we can lean towards a bullish narrative and a potential continuation if 69 holds. Let's look into all of that, but tonight I have a very special video for you guys. We're going to make a Friday special about Fibonacci levels, starting with this new chart that I have here, specially prepared for you guys, where we're going to look at the whole history of Bitcoin using logarithmic scale and Fibonacci levels and see where are we. The results of just looking at this are just mind-blowing. So I want you to enjoy it. Go grab yourself a beer, a glass of wine, a coffee, a chai, lean back. Let's look at that chart, and we are also going to bring back an old chart. The last time that we were looking at this chart was roughly in the bottoming process of the bear market. We use it to exit the bear market. We use this chart to buy at 15k. So why not using it once again to compare the previous cycle with this cycle and have some cool takeaways as well. And today is the first of the month, November. We have new CPR levels, and I cannot believe, guys, that this morning I put out this video 9 hours ago on the 1st of November, and no one in the comments is reminding me that we haven't looked at the CPR monthly levels. Those levels are critical to understand what to expect for November, and we haven't done it. So guys, we have a lot of work to do tonight. Let's get our hands on it. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. We have been doing a very good pace of likes. We have 300 likes, 250, 361, 500, which is amazing. The channel is definitely improving very fast, growing. But on this one, the scene of the crime, shall we? I offer you guys to sing Can't Take My Eyes Off You, a song from Frank Valli, in one of the videos, dedicating the song romantically to the megaphone pattern. I'm really in love with staring at the chart, and I feel like the lyrics are really representing my feelings for the technicals. So why not expressing my love to the chart in one of the videos? But you guys didn't give the video 500 likes, and I think we ran out of time. So what I can offer you guys is, if you really like the Fibonacci levels, give this video a like. Let's get to 500 likes, and possibly maybe next week we're gonna get that song not just sang this time, but also play with guitar. Do we have a deal? Let's go for it. Starting with the 4-hour time frame, guys, you can see that the bounce from 70k on the closing price and 69 on the low end in here is currently in the process of being undone. We talk about this week being an extreme volatile expected week, and that is what we get in. But regardless of all these moves up and down, we are still holding 69. The lowest level we got is 68.8 here on spot on Binance, and you can see that the level of RSI 35, the last line in the sand that we left yesterday in the chart, has been holding the price. We talk about this in the morning. I show you that that is in confluence with that what we have here. The liquidity that we hit gave us also a good hint that that could attract the price, and after there was not as much as in here, so that could slow down the selling. We ended up printing double bottom, and that pushed the price back into 71.6. Now, unfortunately, that looks like retesting now the new scene of the crime. It looks like we are seeing a rejection from what was holding us previously. So resistance, resistance, support, support, broken, now resistance. So that is causing me to start doubting that this move up and the 69 might actually hold. And remember, that below the price, we still have from 67 to 68 a CME gap. It hasn't been taken. So there is a chance that this is an A, B, and C, and we end up closing the gap. We cannot discard it. No one knows if 69 will hold and we will start attempting to hit again the liquidity at the top. It's impossible because there is at the moment at 67 a motivation for the price, at least from the CME gap, and we are seeing a rejection from a level that previously was support. Can we go above this? Yes, but now it's coming into the weekend. Okay, so if we close the price just in 1 or 2 hours on CME, wherever we close it, if we go beyond that, higher than that, then on Monday, that will produce another CME gap above the price, which is not great. We don't want the price to rally over weekends. I repeat that pretty much every weekend. So let's be prepared for the downside and let's be pleasantly surprised if we manage to break above 71.5, which we couldn't do today at least. We continue to look for that reversal. We have the potential bearish MACD cross from the top of the range that is also supporting the idea of further downside. And remember, we are looking for downside, in my opinion, very humbly speaking. I think that is very difficult that we just continue crushing and just going into below 60s and just leave all this liquidity in here once again not taken, even though we are so close to it. I feel like these are whale games. They're just going to take out of the way the longs, and we still don't know how many longs they can afford to take out of the way before they and only them take that liquidity up until 77 and then from 80 to 82. So that's why I'm keeping my eyes. I noticed today some of my bots were buying Bitcoin and I'm pleasantly surprised that they are doing so. Absolutno is finding every time that we break QFL entering with a position. I don't even need to think about. Today was my kind of my day off in a way and I was still trading. If you wonder if there are any news with the big whale exploring, I promise you that today we should be seeing a spike in the amount of deposits. Since 1 day ago we saw these inflows that were adding up to 1.7 billion or 24,000 Bitcoin, and nope, nothing on big whale explorer. Very, very sketchy move because both sources are coming from CryptoQuant and I cannot understand why one of them in notifications reports so many deposits and the other one remains completely quiet. There's something sketchy there. So on the 4 hour, we need to admit that we went to the last line in the sand, that if this breaks, it could be a little bit ugly. We are on the 4 hour, so relative to the 4 hour, we are not talking about huge moves, but shorter moves. And we can see that there is a bottom somewhere in here, which is very close to the support. And then we are kind of in the process of putting a higher low in here with 1 hour and 36 minutes before closing that candle. If we were to close like this, we could be starting to challenge the previous support that we broke on the 31st. That previously was resistance and then it turned into support. So we have a history with this trend line in here and we could start challenging there. After that, we need to hit this line that comes from the top and from this other top there. And what we need to see for bullish continuation is a breakout like this from 51 into the top of the range. And if that happens, we could on the daily be heading once again to the top of the range on the RSI. If that bullish narrative doesn't play out and we end up doing the opposite, which is breaking below this line. Now, notice the timing. If we do that right now before closing CME is one story. If we're doing over the weekend when the market is closed for CME, it's another story. I prefer that we dump over the weekend and then in the week we need to close that gap with a move of the price to where we came from and doing the damage. That's great. Whereas if we start dumping now before CME closes, that sets the closing price way lower. And then we are not allowed, or it's not ideal to start pumping over the weekend because then we need to come back to that closing price that is lower. So it's just a matter of preference based on how liquidity and timing play together. but breaking below now 36 RSI. Let's update that. Breaking below 68.648. That is the last line in descent before we can fully confirm that we are going for an ABC. And on the ABC is an ABC from this top, like this, A, B, and then C. So that will take us somewhere like in the 66, 66.5. Definitely enough energy there to hit the 67 for the CME gap. At the very least, CME gap will be gone if we break this. And yeah, but again, let's put attention to the timing of that. We'll cover that probably over the weekend if anything changes. And on the daily, we talked in the past 2 days about the support of 70 and 69, which is still holding. But we need to be prepared for what could be the next. And the next, in my opinion, comes from this trend line in here on the RSI. And currently that is located at 50. RSI 50, very convenient because typically 50 is considered the line between being in an uptrend or downtrend when it comes to RSI. At least that's the standard. I don't use static levels. I use percentile nearest rank to calculate these bands that are constantly moving based on statistics, but that's another story. And that level of 50 RSI at the moment, guys, where is it? This is almost like dark magic. RSI 50 is at 67.2, which is the end of the CME gap. And what else is that? It's the top of the megaphone pattern. My God. So we could do something like this. We bounce there, we come back down, we break, and we end up hitting the top of the megaphone pattern once again, closing the CME gap, conveniently still above the top of the megaphone pattern, and once again hitting very closely at 66.9, the point of control, the most traded area in the past 8 months. So we have a narrative for that. Let's not marry the narrative. Let's see how things play out once we get there, right? And the open interest is coming back to the scene of the crime, also to test this trend line, which is also like dark magic. If we place the trend line in there, it hits all the tops in here. Very rare to see a breakout bullish from an ascending wedge, which is bearish. But this is what we got. We got the breakout right there. We went to 24.5 billion in open interest and we came back down to 22 billion to test that as support. Whether it's going to hold or not, no one knows. If it holds, I continue to think that all of this is almost like dark magic, but that's part of the fun. So in terms of liquidity, I continue to think that the scalping chart is not giving us a lot. There's just very mild amount of liquidity coming from longs and shorts. No one really is exposing a lot more significant than the other side. So we really cannot use this chart. But you can see if you've been watching the videos consistently that pretty much all the time we can use this. It's rare that we are in a situation that there are not many significant differences. Yeah, there is a little bit more of yellow here at 73K compared to what we right now have below the price. But on the other side, below the price, we do still have these fair value gaps, and we just took the one above the price. So next fair value gaps above are from 71.6 to 72.2. And we have the CME gap somewhere there as well. Good for us because the net longs versus shorts is cooling down. You can see that it has reverted all this amount, that is more than half that we have left until we go to the bottom of the range. Being at the top of the range, it's very risky to be in a long. Being at the bottom of the range is very risky to be in a short. And we are heading back down. Hopefully we get into the red and hopefully we can repeat the same setup that we had on the 24th of October when we were calling for a potential reversal to the upside from this area in here, which we managed to get, and that gave us an opportunity of 11% to the upside. In practice, we were calling for the retest on 26th of October, so from this area in there, not from the actual full bottom. Sure, there is more liquidity from the past 30 days below the price, but the highest levels altogether packed at the moment are above the price at 71.8 and 73. So that could attract the price as well for another push above, contrarian to my current bias, which is let's be prepared for breaking 69 and beyond. Another thing that is again supporting that I'm wrong is that the delta is in red with 200K, not as high as the 360 that I think we have somewhere in here. No, this is 460, which was extremely high at that point. And now we have erased and revert to 200K, putting the shorts at a risk. So I'm starting to get tempted to challenge my idea initially in the video of thinking that we could break 69, but I'm gonna stick to it just because we have the CME gap there. And guys, if you want to use trading different and get access to the pools, I have to make you aware that they are having a sale Cyber Monday until the 6th of October. So if you want to sign up for this over the weekend, that will be great. So you don't forget, whatever you do, you can get additional discount if you use the link in the description. So you get 15% additional using my link. I confirmed that with the CEO, so enjoy. Let's go with the CPR before we go with the party of Fibonacci levels. CPR level. Last month, we managed not just to test and touch once in October the first resistance, which was 69K in here, right there, but also we got above it and we got close to getting to the second level of resistance. There are 3 levels of resistance. We didn't get to 83K, sure, but it was more bullish than what we managed to do in September, where we didn't even touch it once. We got very close. And the levels of November, our support, our pivots are right now 68.9 to 66.2. Okay, those two prices, I remember mentioning them for other reasons earlier in the video. So there is some confluence there. And the month of November is not virgin because we started the month already testing the first pivot. That is 68.9, which coincides with the RSI of 35 in the 4-hour that we say it was going to be the support. Crazy. If these pivots are going to hold and we are due to respect what the CPR model says, which is if you manage to hit the first level of support 1 month and you stick around there, the next month there should be continuation. And that is the outcome of the CPR. Whether I'm wrong or not, who knows, but that's what the CPR model says, that we should be expecting to continue in a bullish state. And continuing in a bullish state means to test the first resistance, at the very least. You can go to the third one if you want. That is also bullish. But bullish starts with testing the first resistance. And that is 76.335. That level is pretty much the end of this liquidity. So we have a confluence there saying that we should get at some point to that 76 and take that liquidity, because that is what the CPR model says. So we have 2 options if we are due to respect CPR. Option 1, we come below in here to 66.3, which is still allowed. That's part of the support. We take out the CME out of the way, go home, and then we bounce back up. Once we bounce back up to 69, the likelihood of hitting 76 and beyond grows exponentially. If we break 66K and we touch the first level of support, which is 61.6, then we cancel out the outcome of September, okay? That doesn't mean the end of the bull run. No, it just means that we delay things. Yeah, worst case is the end of the bull market. Sure, but not going too far and just sticking with the model, it kind of hijacks the outcome of the forecast of October. This is October, this is November. I think I've been saying September. If I did, ignore it. This is October, the month that we just end. And this is November, the month that is just starting. Gosh, Friday nights are always like this. I say one thing and I want to say the other thing. So good. Are we clear with CPR? 76 if we hold the pivots. Ideally, we take out the CME gap and we don't go beyond that. Forbidden level 61.6, because that makes a lot more difficult that we manage during November to hit 76K. Let's go with the next. Do you have your beer, your wine somewhere? Okay, let's get started. This is a Fibonacci channel and I have it set up with these levels. I pick the 0.5s and I pick golden pockets and I pick the levels of 7, 8, 6 against 0, against 1 and against 2. Those are the ones I have. And I ignore this cycle in here because it's just when Bitcoin wasn't mature. We are going to call matureness all this level where we are still in a power law, in logarithmic scale, however you want to call it. And you can see that there are some levels that are hitting in here, from the 0 to the 3618 at the top of 2017. In my opinion, that was the most bullish rally, the most beautiful from the technical point of view. Just look at the RSIs and look at different aspects, or stochastic RSI, especially in this particular cycle on 2017, looks just perfect. From bottom to 3618. No other cycle is so perfect in my opinion. And this top in here where we are, if we extend the band of the Fibonacci, is the same as the bottom of 15K in December 2022 after FTX collapse, and is also the same bottom of October in 2023. And where are we right now? Well, we are between the 0 and the 0.5. So we are pretty much in this channel. And I'm going to show you. There is this channel of development of the price, which I find very similar and equivalent to this channel and this channel in here. So all this action relative to the Fibonacci is just sideways. I don't want to measure percentages of performance in dollar, because this is 359, which is great, is awesome. And in this area in here, we are also pumping 500%. But if we use the Fibonacci scale, you can see that it's like a line that just remains in the same levels of Fibonacci. So relative to Fibonacci, you are just going sideways. And there is the sideways of all this area in here, which we're going to call the bear market for Fibonacci. There is the sideways in here, that is the bear market of 2020. It's already bull market, but let's call it the bear market because it's going just sideways. And we are in here what we can call also the bear market of 2022, 3, and 4. We still don't exit this. We went to 73 and we came back down below the 0.5. So we are in the same range, just like we did in here. We went up and then we came back to the same channel. We also did it in here, more exaggerated in 2019. We went ahead of ourselves. So what am I expecting? What can I take out from this chart? I think that what needs to happen is very obvious, right? So we need to exit the Fibonacci channel and enter in a parabolic move. How high do we get? Do we get to the third line from the top below, like we did in the past one, that we have a COVID crash and it took out from us all of that because it's there? Or do we go to the top of the range? So this, as I told you, is going to be a little bit of hopium for you and for me. And imagine we had something like this, right? Let's do a move like that and let's place it somewhere in here. That is a bit exaggerated because there are diminishing returns, so I cannot just grab a line from the previous cycle and just extrapolate it to the new cycle and expect the same, because there are many players, the market cap is larger, and that is part of what's expected in here. But just doing the first as a hopium. When people tell you we're going to get to 360K or 500K in this cycle, basically they're telling you we're going to repeat the same as here, but with a larger market cap. I think it's very low likely. It depends on how much invested are we going to get from institutions. Institutions are the only ones that can bend that rule that we've been respecting of diminishing returns. I'll be glad if we do that, but if we continue just the current trend, we should diminish in here at least a few steps down in the ladder. So if this made it to the top, this made it 2 down, let's say we go 2 down from here, and we do it in a very short period of time until February or March. That takes us to 434K. I told you, this is hopium. I'm going to tell you where I think is more realistic. I think we are going to get with another leg like this one that we did in here. From this bottom, 1 to 3 levels, and from here I think we can get to the next level of 1, and that is roughly 150K. If we did it tonight, we will be at 130, but that will take a lot of time. But for that, we really need very soon to break the 0.5, the 83, and for that we need to break this liquidity that we have there. We need to overcome that. It cannot win the battle. We cannot just go to 76, see a huge rejection below 60K, entering into a bear market and just letting them get away with shorting from 82. I think that will be in line with the Crypto Crew University that they have a rule that every cycle makes a ratio of the previous cycle with a number of 0.53, something like that I heard, or I think I watched in the past. And that will resonate with that idea of topping at around 80K. But I think we have a chance definitely to get to the level of 1. Let me know in the comments if you want to access and give a second look at the chart or copy this chart into your TradingView account. If some people ask for that, I'm happy to add it to the description. But the most important outcome I see in here is how obvious is that in all this line, we are still doing what Bitcoin tends to do, which is to remain in the same Fibonacci level for very long time, just oscillating up and down, shaking out everybody before finally you enter into a rally. And what I'm trying to tell you, I guess, is that there hasn't been any rally yet. All these moves are supposedly insignificant because they happen every time in here before we get the actual one. And I guess that is the best hopium that you're gonna hear, at least tonight. Let's go into the next Fibonacci one, which is this one that we started looking in the bear market. We were looking for the similarities of these candles in here crashing into the bottom level of Fibonacci. These are the Fibonacci multipliers that I'm using with a time frame of 1 day with an MA of 200 length. And we can see that we have mimicked loads of movements in here. We went to the green level in here. We were very close to get to that green level. And after that, there is a megaphone pattern in here. It's difficult to see, but there is one I've shown you many times that we have a megaphone everywhere around here in surrounding the halving event. We have a megaphone there. I'm about to sync, can take my eyes off you to that. And currently what we are doing is, after having lost the second Fibonacci level, which is also what we did in here around COVID, we came back above it. And after going above it, then the rest is to do with hitting level 2, 3 again. So that will be level 3 and 4. That will be getting into here. And that is roughly 188K. So what is the problem? The problem is that every cycle we go one Fibonacci level lower. We go to this red, then just to the yellow, then just to the green, then just to the second green. So if we were to respect that trend once again, and institutions didn't really get that excited about adding a lot more to Bitcoin, then instead of hitting the same level that we hit in this cycle, then we will be just hitting this one in here, 62. So there is something at the moment that is challenging those diminishing returns. Look at that. Red, yellow, then green, that's the third, then the fourth, 1, 2, 3, 4. So we should have already top at 64 according to those Fibonacci levels. But clearly we were very close already to the previous top of the previous market. And here still we are. So if this continues going higher and just gets once again to the same level that we already top in the previous cycle, that will be 126K. But that will break a huge rule that we are not allowed to hit a top of the market that we already hit, because 1, 2, 3, 4 times in a row, each cycle top in a lower level. So the outcome so far of this is that if we actually put an all-time high again and we continue going higher to the 100K, we are breaking the diminishing returns. And that is positive, right? Because that will mean, or that will confirm that there is a new player in town that is bending some of these rules, and potentially Bitcoin is becoming something completely different, not just in terms of volatility, but also in terms of how high it can get. I leave it here. I let you enjoy your glass, and I'll see you tomorrow. Guys, if you want to trade Bitcoin with an amazing exchange, look no further than Bybit. I use it for my trading bots, and if you use the link in the description, you can get 30,000 in rewards subject to trading volume, lowest fees to trade. You can connect it to my website as well and get access to all my indicators and perks for free if you have enough trading volume as well. If you want a no hassle exchange, then consider Bluffing. I opened 2 accounts on Bluffing in just 5 minutes without needing KYC, no need for VPN, getting access immediately to altcoins, Bitcoin, Ethereum, leverage, everything. And if you need multiple exchange, they're not gonna tell you anything. You get 10,000 bonus subject to trading volume and the lowest fees as well, guys. I will really appreciate that if you have a look at the description. I have all my favorite products, anything that you pick from there. You get bonuses, discounts, lower fees, and you support the channel to continue putting out these videos in all this alpha. Thanks so much for watching. Enjoy your weekend. I'll see you tomorrow.